The Securities Commission and Bursa Malaysia announced temporary relief measures for listed companies. The securities regulator and stock exchange will grant an automatic 1-month extension for listed companies to issue financial statements and annual reports. Meanwhile, between January and June this year, firms with unsatisfactory financial conditions and inadequate levels of operations will be given more time to reassess their financial situation before making the requisite announcements. Listed companies that announce they have insignificant business or operations will be given a 12-month relief period, while companies that have ceased all major business or operations or are classified as PN17 or GN13 will have a 24-month regularization timeframe. Finally, those that trigger the suspended PN17 or GN3 criteria will get an 18-month relief period before being classified as financially distressed. The developer of the ambitious multi-billion ringgit Melaka Gateway coastal reclamation project has failed to challenge the state government's directive to terminate the project. KAJ Development had filed an application to have the Melaka High Court review the state's decision to call off the project that it had undertaken for 3 years. It previously claimed to have spent 700 million ringgit on the project, with 40% of the work done. The developer's application was dismissed yesterday. KAJ's counsel, Datuk Loh Siu Chiang, and the state's legal advisor, Datuk Muhammad Abazafri Muhammad Abbas, confirmed this with theedgemarkets.com. According to them, Justice Anselm Charles Fernandez denied leave to KAJ and ruled that there is no public law element involved in the state's decision. Law said while he respects the decision, he questioned how the Melaka government could be deemed to not be involved in the decision when only the state owns land below the sea and had approved the works. Plus, he argued that the cancellation of the project would lead to the loss of a huge investment in the state. According to KAJ, Melaka Gateway is fully funded by the company without any cost to the government. KAJ filed a notice of appeal against Justice Fernandez's decision at the Court of Appeal yesterday. Mr. DIY Group Malaysia posted a 19% jump in fourth quarter FY20 earnings as top line rose. Quarterly net profit stood at 108.27 million ringgit, while revenue was up by 25% at 768.33 million ringgit. It declared an interim dividend of 0.7 cent per share. In a filing with the Bursa, the group attributed the increase in revenue to a rise in average monthly sales per store, as well as sales contribution from the 141 net new stores added during the year. This contributed to the improved profitability, which was also supported by higher annual purchase incentives in the fourth quarter of 2019. It also recorded about 6.3 million ringgit in other operating income, attributed to rental concessions of approximately 2.4 million ringgit received from stores due to mandatory closures during last year's MCO. For the full year, earnings grew 6.2% to 337.16 million ringgit, while revenue grew 12.5% to 2.56 billion ringgit. CEO Adrian Ong said movement restrictions had a moderate impact on in-store traffic, with customers frequenting its stores to procure their everyday essentials. Despite the headwinds due to the Covid-19 pandemic, the group remains positive on its prospects going forward. Science, Technology and Innovation Minister Khairi Jamaluddin says the government will sign a Covid-19 vaccine procurement contract with Johnson & Johnson soon. According to Khairi, clinical information on this vaccine has been positive, and the cabinet decided to purchase it based on the recommendation of the Covid-19 Vaccine Supply Access Guarantee Special Committee. Putrajaya is still in talks with the pharma giant. Once that's done, Khairi says Health Minister Datuk Sri Dr. Adam Baba will ink the contract, after which the vaccine will be sent to the National Pharmaceutical Regulatory Agency for evaluation. Khairi is leading the Covid-19 Immunisation Task Force, which is handling the nationwide inoculation program. The task force's management team is supervised by two co-directors, namely Health Deputy DG Datuk Dr. Chong Chi Kiong and Army Deputy Chief Lieutenant General Datuk Muhammad Abdul Rahman. Malaysia's vehicle sales fell 24% to 32,829 units in January as traffic volume in showrooms shrank amid the implementation of MCO 2.0. According to the Malaysian Automotive Association, 42,942 vehicles were sold in January 2020. On a month-to-month basis, sales were down 51% compared with 68,836 units in December 2020. Last month's numbers were the lowest since May 2020 at the peak of the first MCO, when just 23,309 vehicles were sold in the country. The MAA explained that most customer orders had been brought forward in December, resulting in lower stocks in January 2021 for some companies. Sales were also hurt by the shutdown of some parts suppliers due to Covid-19, resulting in short supply of components and parts. From a production perspective, production volume fell 13% to 39,666 units in January versus 45,416 a year ago. Looking ahead, MAA said the sales volume in February is expected to be even lower due to the shorter working month.